2020. Happy Monday. Another new trading week. Let's get to it. So, US dollar index is doing what we love it to do, and that is trending. So, last direction coming down the other. A lot of wicks in both directions, but this week we've made it. It may be due to Trump's worsening. This, if you look at the overall big picture, this is it right here, right? And so, what day was this? This was 29th of September. We entered into this range, and then we spent a few days contemplating going back up, but obviously price was not hearing it, and it wants to go lower. So, based on this analysis alone, I do think at least this level. We've been focused on 93, and the reason why I say 93 is because at the very least we can go here and then go back up, because if you look at price action, here's a higher low, higher high, higher low, higher high, and if we go here, we can make a higher low that will still be higher than this low, so it'll still be in that long-term bullish price action. But if we do break this level, then we can even permits that move, right? So that's going to be good for us. So this morning, huge push down. Let's see the 4-hour time frame. So the 4-hour time frame, you can see we've come to 93.37. Not really a key level, so I don't think anything much will happen here. We should continue down. I guess it's just going to retrace a bit. So you may see a retracement from this point, but a weaker dollar therefore tells us that we should be looking for longs for the majors. And so trend was a downtrend, so when you come into the box and consolidate, the breakout tends to favor the original trend. So let's take a look at the pop back to the see the euro. And this is what we wanted last week, really all of last week, was this push up to go long. We got it today before our long, so that's fine. We could wait for a retracement to 1.19, right? So finally this morning with the weaker candle, just start this over. Think of the anatomy of just go up here, run some stops, and sell off, and that's not. If at later in the day, if this still looks the way it is right now, we could possibly go to small position. As you guys know, I don't really breakouts tend to happen, so just take a reminder of that. Fridays tend to be manipulative as well. There was a bit weird days tend Tuesday, Wednesday, Thursday, and maybe Thursday going to Friday for trading, right? So price has jumped up, and this is a bullish engulfing candle. So technically, This is the candle you'd want to go long on, but considering the day, and it is Monday, and considering that the 4-hour time frame doesn't look too ideal right now, wouldn't wait. But um, I mean, if this looks the way it is at 5 p.m., we could go with 0.5% risk, or I'll go with 0.5% risk and see how it is. The original trade idea had a 3.59 R2R. If we just adjust it to current price action, it may have a 2.5, so we do lose a value of 1 for R2R, but nonetheless, this is a pretty decent setup since we know the dollar index is had to go lower, right? Check out pound dollar. And fine. We were waiting for a bullish candle, but none of these were. But eventually, this printed on Sunday. Nice bullish hammer, and price has jumped up and is virtually almost our target. So what we can do now is, big picture wise, is we can wait for this high to get cleared, which is our target overall. If this high can get cleared, we can start targeting kind of price action we want to replicate. So we'll get there eventually. I'm putting an alert so everyone will be notified. My alert will be at 1.3100. So I'm on the daily time frame, crossing up, but we just need a 4-hour closure. So a 4-hour bullish candle closure above that level is going to be fine. And then let's take a look at R2R in this case. So to remove some of these intraday levels since we're not going short anymore. Alright, so let's see. If we go long now, let's do the. So we'll probably get entry somewhere around here. That's fine. TP and stop loss halfway in between previous TP levels. So 2.74, not bad. And if you just look for TPs, just looking to the left, there would be. There you go, right? So it's nice and spaced out and recovering key levels. So, yeah, TP1, TP2, TP3. Now this is roughly 400 pips, right? 450 to be exact. That may seem like a lot, but we have covered more in a few days before. This is roughly 5 days to cover that move. We could virtually do the same this week if the dollar index is feeling jumpy, but we'll definitely get something if this trade idea done as well. So we're bullish, obviously, on the majors and bearish on the dollar index, but Mondays can be very elusive, and we may have a bearish bias tomorrow for these pairs. So for now, we're just getting a general consensus. But price action looks good. We'll take a look at the fundamental schedule, see if fundamentals approve of that. So this morning we had PMI, and that actually came out pretty nice, 57.8. I don't think I saw a bullish reaction in the dollar. Later we have the Aussie cash rate, and we know for most of the nations in the world, monetary policies remaining the same. So this will most likely be 0.25%, like it's been that way for the past 6 or 7 months now. Let's take a look at Tuesday. Tuesday we have Aussie annual budget, so that's tentative, so that will be released throughout the day. Take note of that. Then we have Powell speaking at 10:40 a.m. That's a weird time to be speaking, but so right before we go live, and tomorrow, Wednesday, FOMC meeting minutes. Lagarde, yeah, Lagarde is going to be speaking this week. Pretty quiet week. Pretty quiet. We do have to understand that Trump is sick right now. So when the president of the United States is sick, that's obviously not good. We're probably going to get updates every single day, and God forbid if one of the updates is not so good, the markets will react. So they're bad. Nothing too much to kind of shed light on the dollar, but all of this week, that's for sure. So I'm gonna go check out some pair of recommendations. Black gold to oil. So remember, I think it was maybe 2 weeks ago, where someone asked for oil, and I literally said that until we clear this high, I really don't want to touch oil because it's just I don't think it's gonna go anywhere. It's very fundamentally driven right now, and oil hasn't really done much. I mean, it has pushed down, pushed back up, pushed down again. It's pushing back up. If you look at the weekly candles, they'll tell you that oil isn't really looking to do much, right? So you can see no real separation. So I mean, there is a chance that we could have these lows right here. So at 34.50 per barrel to go short. Otherwise, I'm just gonna wait for that breakout above 43.50. So that is what I see for oil. I don't really want to take any of these intraday or weekly setups. Bit risky in my opinion. There is some support here, so maybe there is a chance that oil may go back up to here, but I don't know. Because if you look at the daily time frame, this is all trend. This is the downtrend. So if you look at here, lower high, lower low, lower high. We could go on to make a lower low. It could be very weird this way. We could retrace at any point. We do have a weaker dollar, so technically oil should go up. But we've seen in the past where the dollar was very weak, but oil just didn't want to budge. That's why for me, the best possible case scenario is to clear this high or this low, and then we have a real down. Cleared this low and this low, but this low barely. So we've barely cleared two lows. If we can clear this one, that will tell me that it's a full-on trend, especially with the uncertainty in the next coming months, especially with flu. That's actually pretty quickly. So that can affect oil too. So I think these are two levels you need to watch out for: 43.50 and then 34.50. Wait for price to break on either end on the daily, and then you'll have the direction for oil. Otherwise, you just be in for a long headache, and you don't. Gold, I think that's what you mean by yellow metal. Not this one. Still getting used to the new user interface, but I like it. I don't mind it at all. So important. We had a short. Oops, we had a short idea that was. I'm not gonna recreate it because it's gonna get messy on the chart. But it was something like this. We were waiting for this level to get broken and to go short. I drew this low and I said, "Hey guys, I'm not entering gold yet. I want a fake out." The reason why is because the one. Let me move this now. No, Jesus. There you go. For one, I didn't like how the daily candles appeared. So the daily candles, we had a bullish hammer and a bearish hammer or a bearish indecision, right? We have equal top and bottom. You never want to enter short and then rallied, considerable amount. So that's why for swing trades and these long-term trades, the daily closure is best. The kind of schematics on the dollar was weak, but it just wasn't moving or trending far enough or creating any separation. So, but this week you can see we've already started off very bearish, and so gold can make another run back up to these highs, right? Maybe back up to 1960, as it has entered this range. So we are in for a week where everything, majors, commodities, take advantage of the dollar. So I don't think we should go against that trend, but again, we first dollar seems to be playing with fire. The longer term trend. If I were you and you're just looking to go long, I'd just be careful. I mean, it's not a bad idea, like to maybe target this. The R2R, it's not bad, right? But based on what we have for GU, EU, I feel like there's better setups to kind of risk, um, you know, 1% for than this. But that's just me, right? I think for gold right now, based on these fundamentals, you gotta look for the longer term picture. All right, euro yen. So straight off the bat, since euro dollar is looking to go higher, I'd say euro yen is presenting euro yen. So last week we had two options, right? To take this thing down low from here to up here, right? 2.8. Okay, and while we're on the subject of euro, last week we took a euro winning trade